Reading out of the Bank Holding Company Act in the paper reference guide to regulatory compliance on page 617. I am in subpart 8, merchant banking activities. And the first topic is permitted investments, letter A. Number 1, financial holding companies may not directly or indirectly acquire or control a merchant banking investment company unless it complies with Reg Y. Financial holding companies may not acquire or control merchant banking investments on behalf of a depository institution or a subsidiary of a depository institution. A financial holding company may not acquire or control assets other than shares in a company unless A, B, or C. A, the assets are held by a portfolio company. B, the portfolio company maintains policies, books, and records, accounts, and other indicia of corporate partnership or limited liability organization and operation that are separate from the financial holding company. Number 4, under permitted investments, a portfolio company is any company or entity engaged in any activity not authorized for a financial holding company under the Bank Holding Company Act, and the shares of which are owned or controlled directly or indirectly by the financial holding company. Limitations on operating a portfolio company that is held as a merchant banking investment. Number 1, the general rule: a financial holding company may not routinely manage or operate any portfolio company except under special circumstances and for limited duration. Number 2, routine management or operation of a portfolio company. A financial holding company manages or operates a portfolio company if any director, officer, or employee of the financial holding company serves as an executive officer of the portfolio company. B, an executive officer of the financial holding company or one of the following subsidiaries of the financial holding company serves as an officer or employee of the portfolio company. Roman numeral 1, 2, 3, 4, and 5. 1, a securities broker or dealer. Would be a subsidiary of the financial holding company serving as an officer or employee of the portfolio company. Roman numeral 2, a depository institution. Roman numeral 3, an affiliate that engages in merchant banking activities. Roman numeral 4, a small business investment company controlled by the financial holding company or by any of its depository institutions. And 5th, any other affiliate that engages in significant equity investment activities that are subject to the special capital charge under the capital adequacy rules of the Federal Reserve Board. C, any covenant or contractual arrangement exists between the financial holding company and the portfolio company that would restrict the portfolio company's ability to make routine business decisions, including entering into transactions in the ordinary course of business. Presumptions of routine management. A financial holding company is presumed to routinely manage a portfolio company if any director, officer, or employee of the financial holding company serves as an officer or employee of the portfolio company. And 2, any officer or employee of the portfolio company is supervised by any director, officer, or employee of the financial holding company. Then a financial holding company is presumed to routinely manage a portfolio company. Presumptions of routine management also include a financial holding company rebutting a presumption that it is routinely managing or operating a portfolio company by presenting information to the appropriate Federal Reserve Board that proves it is not doing so. And 4th, under limitations on operating a portfolio company, as held as a merchant banking investment. Fourth, activities that are not considered to be routine management of a portfolio company. A financial holding company may select the directors of a portfolio company or have one of its employees serve as a director if the portfolio company employs officers and employees to routinely manage the company. And two, the financial holding company does not routinely manage the company except when special circumstances apply to avoid or address a significant operating loss or when the company loses senior management. B, a financial holding company may, by written agreement with a portfolio company, restrict the ability of the portfolio company to take actions outside the ordinary course of business or to consult with or obtain approval of the financial holding company before taking actions that are outside the ordinary course of business. C, under activities that are not considered to be routine management of a portfolio company, there are actions outside the ordinary course of business that include 1 through 9. 1, acquiring significant assets or control of another company. 2, removing or selecting an independent accountant, auditor, or investment banker. 3, making significant changes to the business plan or accounting methods or policies of the portfolio company. 4, removing or replacing of any of the executive officers of the portfolio company. 5, redeeming, authorizing, or issuing any equity or debt securities of the portfolio company. 6, borrowing by the portfolio company that is outside the ordinary course of business. 7, amending the articles of incorporation or bylaws of the portfolio company. 8, selling or liquidating substantially all of the assets of the portfolio company or any of its subsidiaries. And 9, merging, consolidating, spinning off, or recapitalizing the portfolio company or any of its subsidiaries. D, under activities that are not considered to be routine management of a portfolio company, for financial holding company may provide financial investment and management consulting to a portfolio company. A financial holding company may provide assistance with underwriting or private placement of the securities of a portfolio company. And F, a financial holding company may meet with the officers or employees of a portfolio company to provide advice on the company's performance or activities. 5, under special circumstances, a financial holding company may manage and or operate a portfolio company. A, intervention may be necessary to prevent a material loss to the portfolio company, obtain a reasonable return on investment, or when there is a loss of senior management of the portfolio company. Intervention may be necessary for a period of time necessary to address the cause of involvement to obtain a suitable alternative management arrangement to dispose of the investment or to obtain a reasonable return on the resale or disposition of the investment. C, approval of the Federal Reserve Board is required for routinely managing a portfolio company for a period greater than 9 months. And D, documentation may be maintained and made available to the Federal Reserve Board on request describing the financial holding company's involvement in routinely managing the company. C, letter C, eligible affiliate within merchant banking activities. A financial holding company may not acquire or control merchant banking investments unless it is or has an affiliate that is registered with the SEC as a broker or dealer or a municipal securities dealer or a division of a bank that is separately identified and registered as a municipal securities dealer. Again, a financial holding company may not acquire a merchant banking investment unless it controls A, an insurance company that is predominantly engaged in underwriting life, accident, and health or property and casualty insurance or providing and issuing annuities, and a company that is registered with the SEC as an investment advisor and provides investment advice to an insurance company. D, holding periods. A financial holding company may own or control shares, assets, or ownership interests for only a period of time to enable the sale or disposition thereof on a reasonable basis. 2. Shares, assets, or ownership interests may not be directly or indirectly held for a period longer than 10 years, except that investments in a private equity fund may be held for the duration of the fund up to a maximum of 15 years. So this is all part of holding periods under merchant banking activities. 3rd, ownership interest acquired by a financial holding company from a company in which it held an interest will be considered to have been acquired on the date the share or ownership interest was acquired by the company. And B, a company from a financial holding company will be considered to have been acquired by the company on the date that the share, asset, or ownership interest was acquired by the financial holding company. Number 4, any ownership interest previously owned by a financial holding company under a law that imposes a limited holding period will be considered to have been acquired by the financial holding company on the date the company first acquired ownership or company of the interest in the law, under that law. 5, under holding periods, the financial holding company may obtain approval from the Federal Reserve Board to own, control, or hold shares or ownership interests of a company for a greater period of time. And 6, a financial holding company that holds an ownership interest for a period longer than allowed by this law must apply a capital charge to the adjusted carrying value of the ownership interest for purposes of determining the regulatory capital and abide by any other restriction that the Federal Reserve Board may impose. Letter E under merchant banking activities is the limits on merchant banking investments. A financial holding company may not acquire any additional shares, assets, or ownership interests if the aggregate value of all merchant banking investments held by the financial holding company exceeds 30% of the Tier 1 capital of the company or exceeds 20% of Tier 1 capital of the company, excluding interest in private equity funds. Letter F on risk management and record keeping for merchant banking investments. Internal controls. A financial company must establish and maintain policy, procedures, and systems reasonably designed to monitor and assess the value of each investment, the value of the aggregate portfolio, and the diversification of the portfolio. B. Identify and manage the market, credit, concentration, and other risks associated with merchant banking investments. C. Monitor and review the terms, amounts, and types of transactions and relationships between the financial holding company and each company in which the financial holding company has an interest to assess the risks and costs of the transactions and assure legal compliance. D. Ensure the maintenance of corporate separateness between the financial holding company and each company in which it has an interest. And E. Ensure compliance with the law governing merchant banking activities. Number 2, records. Under risk management and record keeping, a financial holding company must make records available to the Federal Reserve Board on request. Number 3, reports. Under risk management and record keeping, notice when acquiring a company. A financial holding company must provide written notice to the Federal Reserve Board within 30 days after acquiring more than 5% of the shares, assets, or ownership interests of any company at a total cost that exceeds the lesser of 5% of the Tier 1 capital of the company, or $200 million. Number 4, cross-marketing activities under risk management and record keeping. A depository institution and its subsidiaries may not offer or market any product or service of any company if more than 5% of the company's shares, assets, or ownership interest is owned or controlled by the financial holding company unless the company is a financial subsidiary of a holding company, of a depository institution, to a portfolio company that is held by private equity funds that a financial holding company does not control, or the depository institution or subsidiaries are engaged in selling or marketing interest in a private equity fund. B, under cross-marketing activities, the depository institutions of subsidiaries may not allow any product or service to be offered or marketed directly by or through any company owned or controlled by the financial holding company. Within subpart 9, enforcement, we'll read about administrative enforcement, civil penalties under the Bank Holding Company Act, and criminal penalties under the Bank Holding Company Act, and lastly, FERA penalties. For administrative enforcement, the Federal Reserve Board may issue cease and desist orders for violations of the Bank Holding Company Act. Civil penalties to the Bank Holding Company Act are up to $25,000 per day for violations and failure to file reports or filing false information. A, if procedures were in place to avoid inadvertent errors, up to $2,000 per day can be assessed, and if no procedures were in place, it's up to $20,000 per day. And yet, if the activities were reckless, up to $1 million per day, or 1% of the company's total assets. C, criminal penalties under the Bank Holding Company Act for knowing violations, up to $100,000 per day and up to 1 year in prison. If intent to defraud is present, up to $1 million per day and up to 5 years in prison. The FERA penalties are normal: $7,500 per day for violations of laws and regulations, $37,500 per day if violations are unsafe or unsound practices are engaged in recklessly or are part of a pattern of misconduct that causes more than a minimal loss to the bank or any pecuniary gain to the parties involved, and penalties up to $1.375 million per day against persons who knowingly commit a violation and knowingly or recklessly cause a substantial loss to the bank or a substantial benefit to the party.